Hello class, this is BLW4112, Accounting for Lawyers, and we are looking at the Advocates Accounts, Part 2, and this is 4.1, and my name is Martin Moirore. Welcome. The previous class, we looked at how advocate accounts are done, and we just want to do a very small recap, a very short one. Then from there, we can be able to look at an illustration of how advocate accounts ought to look like. And we are simply saying that the advocate accounts ought to have the following accounting entries. And what is most important is to note that every client account should have two columns so that we can be able to separate the client with sufficient funds and with clients with insufficient funds. And for that reason, we're going to look at how to do record where funds are received on behalf of the client. And what we're going to realize is that when the advocate receives money on behalf of the client, they'll be debiting the cash book, but this time they'll be debiting the client column. They will also be going to the client account, to the client column, to do the credit there, because as we said, the client is like a creditor, so you have already given money to the advocate, and therefore when they maintain your account, they will be debiting the accounts and crediting your account to show that you have sufficient money in your account. Now, to record payments on behalf of the client, and these are clients with sufficient funds, of course, they will be debiting. When you debit the client account, the client column, you'll be adjusting or reducing the money that you have in the client's account. And of course, you'll be crediting the cash book on the client column, Then, next, we shall look at the third transaction that can also be done. And this is where you have a client with insufficient funds and you are making payments on their behalf. In that case, you'll be debiting the client account. This is the office column. And then you'll be going to the cash book. You credit the cash book on the office column. Remember, when you credit the cash book, you are actually reducing the money in that particular account. And then from there, we have another transaction, which is to record fees that are charged to the client. In this case, you'll be debiting the client account, the office column, and then from there, you open the fees income account where you credit that particular account. Now, the other transaction is to record cash received from the client. And these are monies that you may receive in terms of fees, in terms of disbursements. And in this case, you will be debiting the cash book, the office column, because this is money that is being received by the advocate. And this is money they may have spent, especially for the disbursements. And therefore, you debit the cash book, the office column, and then you credit the client account. You go to the office column and you do the record there. We want to proceed and look at the sixth transaction that you can also record in the client's account. And this is when you want to transfer money from the client's account to the office account. And in this case, authority must be granted. When you have been granted authority to withdraw or to transfer money from the client to the office, you will go to the office account so that you can transfer money from the client to the office account by debiting the cash book, in the office column, and then you credit the cash book again on the client column. In that case, you have now been able to transfer money from the client to the office, the client column to the office. Remember, when you credit, you are reducing, and when you debit, you are just increasing that particular account. Then, because the client's account and the cash book must always have equal balances, we need to now do a set-off. We need to do a contra entry in the client's account. So we shall go to the client's account. You debit the client account to reduce or to remove money from the client column, and that money is in the same account credited in the client's account, but this time you are crediting on the office column. Then when you want to record office expenses, these are expenses like telephone, expenses like transport and etc. You will be debiting the expense account. You can open specific accounts. If you deal with transport, you can maybe have a transport account and etc. And then from there you credit the cash book, and this is the office column. Now, having said that, because we're just doing a recap, I want us to look at a practical illustration which is going to help us be able to see how the dynamics go. So we want to look at this illustration, and this I will briefly look at the question so that we understand the question first. Then from there we see how you ought to look at it. This illustration is about Kengeta and Company advocates who keep all their monies in their clients in a separate bank account, which is maintained exclusively for that purpose. At the end of each month, they make the necessary transfers from the client's account to the office at the end of the month. So it is important for us to look at the end of the month, because within this particular problem, we will see a situation where we are seeing, we are being told in the middle of these particular transactions, maybe on the 21st or 20th, that some money has been moved. So we shall not be moving that money, because the question says at the end of each month, they make any necessary transfers to from the client to the office. Then, in other words, like they write one check for the clients. On the 1st of July, 2018, the balance at the bank in the office account was 75,000, and the balance at the bank on the client's column was 1,055,000, which was made up of the following credit balances. In other words, these various customers or clients had what we are referring to as sufficient funds in their accounts. We have Asper and Company having 50,000. We have Caro Trust with 115,000. We had Kenga and Company 350,000. Yakub and Company Limited 540,000, which of course makes up to 1,055,000. I'm sorry, there is a slight mistake there when you're adding up, but the money should be 1055,000. Then we have these transactions which took place in the same month. So the receipts and payments for the month was as follows, and these receipts were banked daily. On July 2nd, received from CNC, who is a client, 100,500 for costs as rendered to the client. Then on the 9th, we paid 5,000 for insurance premium for Asper and Company. You have vehicles, you have your office, which you can insure, and when that happens, that is an expense. Then, of course, paid 9,000 for repairs to the premises rented by Jedida and Akaro Trust. Then on the 15th, paid 9,000 for advertisement for Yakub and Company Limited. Then on 15th, we were authorized to draw that 5,000 shillings on account for Caro Trust. On the same day, we were also authorized to draw 120,000 on account of Yakub and Company Limited. Then on 19th, a check was cashed, that is 10,000 for Kiru from Petty Cash. Then on 20th, received from Financial and Company 100,000 in advance on professional services. Then on 20th again, there is a request of Joroge and Company, which is paid 1,000 registration fee. Then we have received 90,000 debts collected from H&C, H and Company. Then on 22nd, we paid H and Company 84,000, being amount recovered less costs agreed. And I think you can see what is happening there. The money that we had received initially was 90,000. And we can see that already this is it's 4,000, which is the amount which is involved. So of the 90, there is this part, and there is also the part of the cost. That is where we are told, we also recovered our costs. On 23rd, received 45,000 from T and Company, being debt due to Yakub and Company. Then on 27th, we're just about to get to the close of the question. We received from ASPA a check for that 4,000, being balance of cost rendered. This is 79,000 plus out of pockets. Then we agreed costs with financial of 120,000 and received their check of 20,000. So this is we are agreeing on this, but we're also receiving cash at the same time. Lastly, we paid salaries of 240,000 and drew petty cash of 20,000. So what are we required to do? We are required to do two things. One, we write up the cash book and the client's ledger accounts. And two, we draw a check on the client account for the amount due to the office account. That is as at that 1st July 2018, sorry. So let's look at the solution. Let's look at the solution. And for us to be able to see the solution, of course, we have the balances. We have the balances brought forward. Remember, we say that the balance brought forward in these particular accounts, the first one was the office. The office had 75,000, and this other account for the clients, all the 4 clients had a total balance of 1055,000. So let's look at this first transaction. So this first transaction says that we receive from CNC, which is a client, or 100,500 shillings for costs as rendered to this particular client. Of course, we'll go to the cash book. We will debit this particular cash book. And so because we are actually receiving, so when you go to the cash book, you can see that we have CNC, which is, these are costs which we are receiving. And when you look at the client's account, because this client has enough money, so we will be using we are receiving this money into the office account. And this is what we are doing there. So when we receive, you debit the cash book on the office column, and the cost is actually there. Then, of course, we can go to CNC. When we go to CNC account, you can see what is happening. You can see what is happening. We are debiting the cash book against the office, and we are crediting this particular account, and the figure involved is 105,000. But there is something else we have done, because if we are going to receive money from this particular customer or client, then we must have costed. We must have sent a bill of costs or services, and therefore that is why you realize on the same date on this other side we had already shown that there was 105 costs which were also debited to this particular account, so that then we cannot be able to receive this money, because we cannot receive money for which we have not been able to invoice or send a bill of costs. Now, then, of course, we go to the second transaction, and this is on the 9th. So we are paying 5,000 for insurance premium for ASPA. So this case, we are going to go to the cash book. We credit cash book, and we debit ASPA account. So when you go to the cash book, you realize that this is ASPA, because we are paying. So when you're paying, you're reducing. And because this customer has sufficient funds, we're going to credit the account of ASPA. So when you go to ASPA account, you realize this is where we are reducing. This customer had a balance brought forward of 50,000, and now we have spent 5,000 for insurance on their behalf. So we reduce that account on the client's column by 5,000. And I believe you have been able to see This is where we have ASPA account with a balance of 50,000. So you go to that account, you credit this particular 50,000 there to show that the account has a balance. Then again, on 15th, we paid 9,000 for repairs to premises rented by Jadida at the Caro Trust. So we are going to be going to the Caro Trust, but again, remember, Caro Trust had a balance, a credit balance of 115,000. So you will be going to that account, crediting that 115,000. Then, of course, on the 15th, you also show that other transaction. So we're going to the cash book. When you go to the cash book, you can see this is a Caro Trust. This is 9,000, which is removed from the client column. And when you go to Caro Trust, there we are. You will find that we have this cash that has been paid for those particular repairs, and this is on the client column. So that is how you go about that particular transaction. Then on 15th, this is where there is a lot of interest. On the 15th, we are paying, we actually, I want to go to this transaction where we have authorized to draw that 5,000 on account of Caro Trust. We have been authorized to draw that 5,000. If we are going to draw that 5,000 on this particular day of 15th, then of course, this money will be received in the bank. So when you go to this particular transaction, we will go to Caro Trust. When you go to Caro Trust, because we are going to show this, but remember what we said in the description of this particular problem is that money is always removed at the end of the month. So what we are going to show on the 15th is the cost that we are supposed to be drawing money for, the cost that we are going to be drawing money for. But for us to be able to see what I'm saying, remember what we said, that at the end of the year, rather the month, we are going to do a set-off. And you can see this set-off that is done by the end of the month. So these 35,000 shillings will be part of the check that will be written, one check that will be written to pay these particular advocates. And therefore, if you look at this is what we are referring to as the set-off. So we are going to be removing money from the client, that is 35,000, and that money will be set off to the office. That is what we refer to as the set-off. That is what we refer to as the set-off. But now, because we are writing one check, we cannot be able to see specifically that 5,000 shillings because it will be one check. But when we are doing that one check, you realize we shall be debiting the cash book with a total of all the checks, because if I may move forward and show you how the check will be done, this is the check. And you realize that Caro Trust, there is this amount that we have authorized. There is this amount that we have authorized to draw from the account. That is that 5,000. But it will be part of this 315,000, which is the check which we are going to write by the end of the month. By the end of the month. So when you go to the cash book, for example, you can see that the office is receiving from all the clients 315 worth of a check. 315 worth of the check, and this is also removed from the clients. That is the same check for all these particular clients. So in other words, we are saying that when you have to draw money from the clients, you write a check. Remember, when you operate current accounts, you use a check. So you'll be writing a check, but this check will be one check. Then from there, you have a list of all the clients from which money will be drawn from the accounts. But in terms of accounting, this is how you go about it. And then from there, of course, on the same 15th, we also authorized to draw 120,000 on account of Yakub, on the account of Yakub and Company. And therefore, if this is going to happen, we will realize when you go to Yakub account on this particular day, what we are going to find is that there will be a debit balance for costs, but we shall wait until that first so that we can do one check. I just want us to go to Yakub so that we can see what we are saying. So when you go to Yakub on the 15th, we have this 120. So we have now captured this cost that ought to be drawn a check against of 120. However, we will have to wait until the end of the month. And then at the end of the month, that is on that first, this money will be removed from the client because a check is going to be written. And of course, this is going now to be the set-off. This is the set-off. You realize this figure and this figure is the same because what we are doing here is the set-off. However, when you go to where we are drawing the check by the 31st, you go to Yakub, you realize Yakub will contribute 120 of the check of 315,000, which is going to be drawn against all the clients. And again, now when you go to the cash book, on the 31st, when the check is received, you realize that the office will receive a check of 315 from all the clients' accounts. And because we will draw from there, we will debit into the office account, but we remove it from the clients. You require that that check is written on the credit of the against the client's column to show that that check has now been transferred or money has been authorized. Then, of course, we can look at another example. Of course, on 16th, we are receiving from Jedida and Company at the Carol Trust. And if this is going to happen, of course, we will be debiting our cash book, that particular cash. And then, of course, we go to Jedida at the Carol Trust, sorry. And you go to Carol Trust, you realize that that money is deducted from there. That is cash of the cash of 35,000. The cash of 35. The cash of, let me just go back a little bit so that we capture the it correctly. Received from Jedida 44,000. Yeah, it was the 44,000 that we are receiving from Jedida, from Carol Trust. That is the figure we have there. So we can keep moving and moving and moving so that we are able to see all these accounts, how they are recorded. So you move from account to account, from account to account. Like, for example, this is a check which was cashed, 10,000 for Kiru for petty cash. So when you go to this particular account, the figure involved in that check was 10,000, that is Kiru. And you can realize that the 10,000 that is on 19th, this is petty cash of 10,000 is captured there. That is petty cash. So we can keep moving from each transaction to every transaction. We received from financial company 100,000 in advance. This is very, very exciting. I think this is important for me to explain. Where we are receiving from financial company a figure of 100,000 in advance on account of professional services offered. On account of professional services offered. So if you're going to receive from financial for these particular services, on this particular day, you realize that this figure will be captured in the cash book, 100,000. You have this is received. This client has money, has sufficient funds. So we'll go to the client's account and debit this particular cash book against this particular client. And then from there, when we go to financial, you realize that you credit this particular account on this particular 20th, But we are also saying we are, if you go back to the transaction on the 19th, we are also receiving some cash. Those are the services offered. I want to go to 20th, where we have a request. At the request of Joroge and Company, we are paying 1,000 registration fee. Of course, this will reduce the money we have in this particular cash book. So this is the cash book we have. For Joroge, we are using our money. That is 1,000. We are just assuming that this account has no money. These are insufficient funds. These are what we are referring to as disbursements. In a sense, this Joroge will have to reimburse us. This is a very good example of disbursements because Joroge has no money, he has insufficient funds, but he's now requesting that the advocate does the payment on their behalf. That is why we are using the office column, though we are paying on behalf of this particular account. So these transactions, you move on from one to the other. Maybe what I need to explain in details is on 21st, whereby we receive 90,000 debt collected from H&C. So when you go here, you go to H&C, maybe I need to explain, because on 22nd, again we have H&C. And if you look at H&C, we have 84,000 being amount recovered. So we have already received this money, this 90,000. But if you look at this next transaction, we are saying we are paying this money, but this is money that includes or excluding these particular costs. In other words, of the 90,000, there is some cash which was for costs. So we are going to capture those two particular scenarios. And therefore, when you look at H&C, the money that we are paying, of course, you'll see that this is the money that we are receiving from H&C. And of course, this is going to be very important for us to note that from H&C, we are actually receiving from this particular client 99,000. But when we come to pay of this 90, or this is on 22nd, we are only paying 84,000. We are paying 84,000. So what does that one mean? It means, therefore, that the balance between 99,000 and 84,000 was what we are referring to as the costs. And that one can be seen very easily when you go to H&C. So when you go to H&C, you realize that the money that we have received in this particular account is 99,000. But this cash involves 15,000, which is what we are referring to as the costs. These are the costs. When you add the two, you realize it's 99,000. So this is the costs, and this is the money that we are going to pay. We received this much out of that particular debt. 15,000 was the cost. This is on 22nd. And 84,000 is what we are actually paying out, which you can also be able to find on this particular cash book when you look at it. But remember now, as we now come to the close of this particular business, this 15,000 is money that has already been paid again. So it will be part of what H&C will be paying. It will be part of what H&C will be paying. That is why we have a set-off. That's why we have a set-off. This 15,000 will be the contribution, of H&C in the check that you're going to write. So when you go to the cash book, you realize that that money will be part of this 315,000. That 15,000 will be part of this, which will also be credited to the client. Now, from there, the other transaction I may also mention something about. Of course, this one is simple. We are receiving 45,000 from TNC, being a debt due to Yakub. So that is, if you go to the cash book, you just receive that 45,000 from TNC. And this is a client because the client has sufficient funds. And when you go to TNC, that is Yakub and Company, that money is clearly shown there. That money is shown there. So we will keep on doing these particular transactions. These particular transactions. Let's go to the next transaction briefly so that we can maybe look at how to do the balancing. Now, Yes, we can look at received from ASPA, a check of that 4,000 being balance of cost rendered plus out of pockets. We are receiving a check from ASPA being a cost balance of the costs rendered. So when you go to the cash book, where you're receiving that 4,000, you can see this is received very well there. That is at 4,000 because we're going to debit the cash book, the office. Then, of course, when you go to ASPA, you'll be able to see that 4,000 shillings there, which is being received, So, in other words, for all these transactions, you keep on recording and recording and recording. And then from there, at the end of the day, you will be balancing these particular accounts. And then, of course, you draw the check, and then you are done. Now, let me look at this one where you are paying salaries to 40,000 and drew petty of 20,000. Of course, this is basically going to be in the cash book. And when you look at the cash book, we have this petty of 20,000, and we also have these salaries of 240,000. So, in other words, that is how the cash book will look like, and that is how the various clients' accounts will look like. And eventually, as I've said, the other thing that you needed to have done was to come up with this particular check. And we have seen exactly how much each one of these customers is going to supply. This one will provide 45,000. That is how much is going to go to this particular account. This particular check, Yakub 120, then financial 100, and then H&C. When you add all those figures and then go to the cash book, as you balance off this particular cash book, you realize, because this is money that was authorized, then we are going to debit. We're going to debit 315,000 into this particular cash book, and that money will be credited to the clients because this money is coming from the clients. So in other words, you're writing a check to draw money from the clients, and that is shown in the cash book by crediting, and these checks will go to the advocate's account in the bank, and that is why we have the office debited. Then, of course, once you have been able to do all that, the next step is to balance off this particular cash book. So you'll be just going to compare the client's account, the debit, against the credit. You determine the totals here. This is 1,344,000, which should be the same on this side. So the balance in this particular account is 921,000. Then, of course, you compare the office column against the office column on the credit. So you add all this money, it will give us 359,000. And when you balance, you realize that the account will have a balance of 298,000. In other words, we have more money at the end of this particular period than where we began, because we began at 75,000. And the clients, we have also increased the clients because we started with 1050, actually we have reduced because we started with 1,055,000, and this time round we have 921,000. Ladies and gentlemen, this is how the accounts are done for the advocates, and in our next illustration, we shall be looking at a situation where we now capture what we have here. We also look at what we refer to as income and expenditures. We also balance that so that we can see whether we have a surplus or a profit. Then, of course, we shall be preparing the statement of financial position so that now we can see what happens. How does what is akin to the profit and loss account look like for an advocate? So we prepare what we refer to as income and expenditure account. Then, of course, how does the statement of financial position look like, so that we see exactly how will the statement of financial position, or what was previously referred to as the balance sheet, will look like for an advocate or for a professional firm. Thank you very much, and we now come to the end of our class today. Thank you very much. God bless.
These televised lectures supplement our robust online learning going on our MKU online platform. You can view more on our televised lectures via our online platform. We are in a digital era, and Mount Kenya University knows this. The following are the steps to follow so as to complete your online application. Download the application form from the website www.mku.ac.ke. Attach copies of your academic certificates and ID. Pay the application fees via M-Pesa pay bill number 270988. Your ID is the account number. 2,000 shillings is the charge for a postgraduate. You can also deposit in the bank accounts provided on the website. Then email all the above to apply@mku.ac.ke.